And it closed APLD for 12 cents. Get in for 18. LW was a good one today. I got in for 25 and out for 45. Buy with a little bounce. Get him out of APLD. Don't like it. Don't like the price action now at all. As I said, I didn't like the fact that it was showing some red when the market was going up. It's kind of indicated that things are going to fail. It did come through the 8, tried to bounce off the 15, didn't make it. So I guess I did the right thing to pull the plug there. Okay, looking for some more trades. See if we have any more questions. It's about 11:53. Okay, and right, gonna look for some trades. Mostly all intraday trades right now. I'm not going with any swings yet until I get confirmation that the SPY is going to close above this 8 exponential moving average today. It has not done that yet, and it's pretty much sitting just above it. It's the 15 is 679.40 on the SPY, 679.40. So pretty not that far away. And we closed CCL for a decent profit today, actually. I get out for 15, I get in for 12. It's about 25%, but a lot of folks get out for 18 cents, 17 cents. Some folks get in yesterday at 10 and get out for 18 today. That's pretty nice moves. So that worked out good. We closed out the KSS weekly ATM trade. I'm just not I'm not thrilled about the price action on it anymore. I like it still compressing, but it's compressing below the 8, which I don't really like, which is below our strike price, which means unless it's bounced up today, we're gonna have to take a loss on the ones we bought back most likely, and we're not getting much movement to the downside, which means the January ones weren't going up much in price. So I think we did pretty well to get out of that for a 10-cent debit, which means we made about $60 a contract on that trade, which I think is pretty good. You know, easy trade to take, no big sweat. Yeah, we get out for $10. I get out for $10 debit. Right now it's at $20 debit, so saved a little bit of money on that. Nothing here, nothing to really hang your hat on as far as price action is concerned. Again, I'm just looking for some intraday stuff right now. It's about coming up on 12 o'clock. Abraham Kamar, what do I think of silver as a swing trade? Yeah, I mean, this thing has been bullish for a long time. It's not terribly extended. The 8 on this thing is about $58.20. The price is at $60.94, so it's about $2.50 extended. uh, and the ATR is about $2. So it's not overly extended at all. And is it a good swing trade? Well, I mean, technically it's set up beautifully, yeah. So it's a very nice swing trade. Could it pull back a little bit to the 8? Sure. But yeah, I like it as a swing. I mean, the precious metals are really good right now. They're moving up nicely. Silver is probably the strongest of the two, of gold and silver. But there's other ones. There's copper in there. There's palladium in there. There's a bunch of different ones in there. Most of the precious metals are doing very well. I'm not going to swing anything until I get the SPY to tell me. Gold and silver are different because they don't necessarily trade with the market. Just like biotechs don't trade with the market. They trade to their own beat. But I mean, there is some consideration of news, etc. on gold and silver, but they've been very strong, and I don't know any reason why they won't continue. Bitcoin back below the 8, Shy, thank you. Turned around massively. It's been very volatile. Hey, Robert. CAPR looking good? CAPR? Sorry I get to some of these questions a little late because I'm doing stuff and then I'm trying to go do them in sequence. Yeah, CPR is an interesting stock. It's a biotech. All I can do is comment on the technicals on it. It's a big catalyst here, a big move up, and we're just moving sideways. This is a bull flag. This is the flag pole. Here's the flag. What you're looking for is a breakout here, right? And typically this is your breakout level right up here, right? Over there and then up here. But this is your breakout level right there, which is at 31.44. This is a pretty big price move, so in this thing, but that's a pretty interesting setup right there. It's riding right along the 8. This is going to be move a lot. I doubt that it has any decent options that you could trade on it, which means you'd have to be buying the stock. Maxim PG for short. Procter & Gamble. Yeah, it's a decent short today. There's very little volume on this thing. Again, and I say this all the time. There's a support level on it. It needs to stay below that 8 and 15 right there to be a short. It's okay. This LW, this thing is obviously was a tremendous short this morning. See, it's still drifting sideways now. The candles are getting very small. Nike also gapped down big on earnings. It's really not going anyplace. It's staying right in the same level. You don't really want to trade them like that. You want something that's got some continuous momentum. Hey, Arisha, on Discord it says KSS trades closed, but it does not on here. Is it closed? It is. Closed position right here. It is closed. Yeah, I'll put that in there. It's closed. Closed it this morning here. This is the closed position is what I posted. Buy back the December 19th puts and sell the January 21st puts for a $10 debit. Positions closed. Shai says the gold and silver respect the D1 8 very well, so try to get in there if you want to trade it. Yeah, they're relatively far removed from the 8 on the daily right now in both the gold and silver. So you'd be looking for a pullback. Gold's much closer to it than silver is. Here's gold right here. There's the 8 right there. See how it comes down to it and bounces. So if you're going to do that, you just be patient with these. You don't have to worry about earnings on them or anything, so you can just be patient. That's why I wouldn't be chasing it. It's a little removed from the 8 exponential moving average, but definitely both of them are bullish. Okay. We get through most of the questions now. Thank you for all the questions this morning. Great information, great questions out here, and great stocks being posted. just chopping around. Low probability trading environment again today. Market just moving sideways. It is trying to stay above the 15 on the SPY. Trying to. Tesla pulled back pretty hard. Again, this is a double top in Tesla. This right here is a double top. That level goes all the way back to last year at exactly the same date. Right here, December 18th. December 18th. And it's basically got very weak. You still have some horizontal support and resistance levels in the 8 here, but I'd be careful. I'd be careful being long Tesla right now for like a swing or anything. He's shy. Yeah, Chai touches the gold and silver on futures, which it trades around the world all 24 hours. But so he says it touches it almost every day, but not in the U.S. market. Ramkumar Palantir looks like a good long. Yeah, it looked good this morning. Moved up. It still looks decent. Here's your position on it here. Again, get through this horizontal resistance level today. Looking good. You got another horizontal resistance level up there. You want to see it hold here. 5-minute chart. Good volume this morning. Nice move up. And then it just kind of, the volume's kind of drying up a little bit here. But it's a nice setup. It's pulled back to the 8. You can take it right here off the 8 to the upside. I'd probably stick with it for an intraday, but it wouldn't be a terrible trade to take overnight. Market moving up pretty nicely here right now. Again, I'm out of the LW trade for a nice win, and I'm out of the APLZ trade for a loss. This one right here, which is moving back up again nicely. Right, about 12:18 right now. Friday afternoon. Hey Ray, you've been following silver, and it seems you can just finally buy at the open as it makes a good move at the open. Problem is, it's making news highs and then flattens out just about when I want to jump in. Yeah, I mean, be careful about making assumptions about what they do each day. It's good for a while, but silver's a pretty nice strong move right here. What Shai pointed out was just a lot of times if you're looking for something like that, wait for it to come back to the 8. You're going to have to be patient. It could take days or a week or more. Hey Gary, on the TOS APLD chart, the short-term Laguerre took about 3 green candles to turn blue. Is that divergence typical? Okay, let's take a look at that on APLD. Took about 3 green candles to turn blue here. I mean, it was bearish here. You can see that it's bearish here. And then it took some candles to get up above this 20 level right here. That's where it turned blue right there. It depends on, I mean, it can happen in 1 candle, it can happen in 3. It just depends on how sharp these moves are. You know, the steepness of this is going to make the difference. If this jumped from here all the way up to here, it likely would have gone blue in 1 candle. But there's no set number of candles it takes before it changes color. All right. See, this one's staying yellow here. But one of the things you have to be, when you're looking at the Laguerre here, the color's telling you what the direction is. All right. Yellow tells you it's going down, but you see how high it was when it was going down? That was not, even though that's yellow and it looks bearish, the price just tells you it's not bearish. The Laguerre is still very high. It's almost at 80. And it pulled all the way down almost to 20. But see what the price did? Ran right along the 8. So even though this is telling you that the momentum's coming down, the momentum's coming out of the stock, but the stock's not selling off, especially because the SPY was likely going up, and then it reversed right back down, right up here again. You'd want to be trading this long. You wouldn't want to be trading it short. So this is more what you're looking for. You take it here as it moves up. SPY coming up here now. A little bit of a move. A little after 12:20. Market grinding up here now. Again, SPY getting above the 15 exponential moving average on the daily chart. So we want to see if we're going to be bullish, we need to see it stay above there at the close today. That would give us a little bit of conviction for a long. Again, I closed the KSS today for profit. The weekly ATM also closed CCL for a nice profit this morning out of that position. I took a day trade, or an UMCAT trade in LW, made about 80% on that one, and then I took APLD for 18 cents, get out at 12, took about a 50% loss on that one. No, 30% loss on that one, on APLD. Pulled back too much, so I'm out of it. Again, with these UMCATs, these out of the money catalyst stocks, you can't go through something like that. You can try it again later, but you can't. You don't want to ride this through because it's going to really destroy your premium. Hey, Sarine. The webinar was great. Yes, yeah, thanks. Wondering how much space is okay between a trade and its next resistance, as I know how close to the next support resistance levels. You know, there's no set number of how much space there is. If you're trading options, you want to have enough room for those options to move up for at least 20, 25, 30% before you get any kind of resistance level. So you'd have to calculate that based on what the options are going for. You just don't want to be really close to a support or resistance level. You just don't want to even take a trade when there. So you want to have some visible space between it. The distance can be dependent upon the stock. I mean, some stocks can be fairly close to it. If a stock is 50, 60 cents away from the support resistance level, but it's a cheap stock and it doesn't move much every day, then that's probably okay. But you can have other stocks like Tesla that's $2 away from resistance, or $2.50 away from resistance. You probably don't want to take it because it doesn't necessarily mean it's going to go right to resistance. It can stop when it gets close, which would be like $1 or $2 away. So it depends on the stock price and how much volatility there is in the stock. There isn't really a cut and dried answer for that. Some people say I want to have at least a 10% difference between the stock price and my resistance level. That can be a lot. I mean, if you're in a Tesla, a 10% difference on the stock price is $47. So you're not going to get that on those kind of stocks. I would say you just want enough space so that it's not right. You can, if it moves toward the resistance, not to it, just toward it, because they don't necessarily go right to it. Sometimes they'll stop before they get there. You want to be able to make at least 20, 25, 30% on your options. Whoops. I had my mic off, Sarang, I think, when I was answering your question. I'm sorry about that. And I don't know, I'm not sure which questions I answered with my mic off. You were up Gary was talking about APLD. The short term took about 3 green candles to turn blue. Again, the number of candles it takes to go from red or yellow to blue depends upon the steepness of this momentum move. The steeper it is, the faster it'll change. See here, it took 3 or 4 candles before it moved up, but you can get them. They can change much more quickly than that. All right. This is not a good example because this is a bullish stock right here. But here it took a bunch of candles, but this is right at the open today, so never mind that. But yeah, there's no. Just depends on how steep the move is to the upside. A real quick move to the upside will change it from one color to another very quickly. One candle. Hey Sarang, again, webinar. You think it was yesterday? Is it okay to take a trade when it's near resistance? Next resistance, as in how close is it? Too close? That's a hard one to answer because you can't really use percentages. It's got to be when you look at the resistance. Make sure that if the stock moves towards resistance, doesn't have to go get there, that you're going to be able to make 20, 25, 30% on your options. In other words, you don't want to be so close that the options are going to only move up, 4, 5, 6%. You want to have enough room to the resistance of the support level where your options can move at least 25 or 30%. Preferably, you want it more than that, but that's adequate. Again, low probability trading environment here. Our exit on KSS was good. We took a 10-cent debit. Which right now you could get 8 cents, so maybe a couple pennies difference, but very, very unchanged from when we took it off. When we sold the January, we got $82 for it. It's 83 right now. When we bought back this week's 23.50s, we bought it back for 92 cents. It's at 91 cents right now. So basically, very little change. And CCL I get out for 15. People get out from between 15 and 18. It's at 9 cents right now, and the stock has moved up, which puts you under the threat of having your short calls. If you haven't closed this out, so short calls expiring today, you could get assigned on it tonight. So both of those trades are closed. I don't have any new trades on right now. We closed both of those. Those are the last 2 we had on. We closed one yesterday on Roblex. That was a nice one. And we closed Oracle the day before that. That was a nice one. And then J&J was before that, where we made some nice profits on that one. Had a few losing trades this month, though. So tough, very difficult month for trading. Trying to keep the number of trades we take down. Trying to caution people not to take a lot of trades. Swing trading, very difficult right now. Very difficult. I'm in Microsoft. That's not working for me yet. Stock still looks good on the daily, but it's not making a move up I would like it to. To kind of get a feel for why I'm in Microsoft. What do I need to stay in it? Well, it's a pretty nice move. I was hoping to actually get out of it yesterday on this move, but it pulled back too quickly. I couldn't make it. But notice it's above the 8 and the 15 right here. Now the 8 is below the 15, so this is not good, but it is moving up. It's turned white. That means it's trending up, and the stock is holding the 15. So this is what I want to see. And then next week I want to see this 8 come back up through the 15, have the stock move up toward 493. That's what I'm looking for on Microsoft, as it's coming off this low right down here. You see we have a fairly strong support on the 200-day moving average. So that's my thought process on the Microsoft calls that I have. Now the question's, Sarang, yeah, on a PBO, let's say we make a new high and then pull back from it. Should the expectation be that that high is resistance, or does that also depend on the volume of the candle? Are you talking about this on a 5-minute chart or a daily chart, Sarang? You like PBOs a lot. They're your best journal trade, but I struggle sometimes to know if the resistance that should stop it from taking the PBO daily. Yeah, obviously you got to take into consideration on a PBO how far up can you go. When a stock pulls back and then bounces, usually you're going to have enough room for that stock to make some profits on that. It's hardly a PBO if it's coming right off a resistance is very close. Normally a PBO is a pullback opportunity, means it's moved up fairly high prior to that. So it's coming back, not just one candle, but it's coming back for several candles, 2 or 3 candles at least to the downside, you're hitting support. Usually that move is going to be significant enough that you can notice a PBO. A PBO that just moves 1 or 2 candles in a very small distance off of a resistance level is not really a PBO. So anytime you take a PBO, it should be significant that you can see the pullback and see if it bounces, that it's likely to bounce quite a ways, because it's coming off of a resistance level that's far enough away that you could trade it. So if it was that close, if your resistance level on a PBO was very close to it, it's, in my opinion, it's not a PBO. The PBO would have to be coming from a much higher level, so you would have distance to the resistance level. See if I can find any PBOs. So here's a couple of PBOs. Here's a Bank of America. That's a PBO, right? That's a PBO. This was a PBO here, all the way back here. Here's your bounce. This one you can't take because you are close to some resistance levels there. But on here, this is a pretty nice PBO. And you certainly don't have any resistance till at least up here, at least the top of that candle. See if there's any others. I'm sure there is some. Yeah, PBOs like this, which is that's not a good PBO. It's not even bouncing off a support level. Neither is that. Neither is that. You gotta find some. See, I don't consider what I'm looking at here PBOs. This is a PBO, right? This is a PBO. It's a big enough drop to the 8. There's nothing really above it to resistance. It's a PBO. It's bounced off of the 8 and the 15 and moving up here. That's a good PBO right there. Now here's one you might be talking about. Here's a PBO in Bristol Myers. All right, pull back right to the 8. Here's your resistance, 30, 55, 48. That's fairly close, but on Bristol Myers, that's actually $1.30, which is actually quite a lot. So that I wouldn't consider that too tight. Again, being able to define the PBO is very important. Like this is a PBO in JetBlue, but you haven't gotten above the 8. Is when you're in JP Morgan. The banks, a lot of the banks have PBOs right now. Same with Dow. Obviously, you got to close above the 8 and 15, but that's a tradable PBO. All right, just from some examples, just kind of running through some quickly. Okay, I think you had some more comments on that, Sarang. Let me look. The move up. Okay, you have a feeling that the move is up is done because everyone who's buying unloaded. I think this is a mentality a lot of new traders struggle with, and the reason we might like to have to chase, like we have to chase the first move. Well, listen, one of the problems we've got with all of these trades right now is the market, right? So getting the first move a lot of times is very critical when it's going to reverse back down again, which means we don't want to be in swing trades at all. But the move up is done because everyone who is buying unloaded. They're going to maybe unload at a resistance level. It just depends on the volume on those things. Typically, when the stock pulls back and then bounces, the people who are buying now are new buyers. They're not folks that were in it before. They're new buyers, and the whole idea of a PBO is when the stock comes back and starts to bounce, that most of the sellers have been taken out at that point. They're out of the trade. Good questions, Sarang, on those things. Again, I think the key here is being actually able to identify what's a valid PBO. A valid PBO does not have a bounce right into another moving average or resistance level. It needs to have more room from there. That would be if a PBO was so deep that it pulled back and broke down through the support levels and then bounced up. Now you've got the supports, which now become resistance in the way. PBO is coming down to a support or resistance level and then moving up when it doesn't have an awful lot of overhead resistance because it didn't already pull down already through those moving averages. If it pulls down through the moving average, it's broken down. Now you're trying to get a bottom. You're trying to find a confirmed bottom, but it's really not a PBO at that point. It's just a high pullback that broke down through support. All right, about 12:40. Well, I'm going to get lunch here pretty soon. Low probability trading environment, LPTE, which means we don't want to take many trades. I'm just looking for a few WMCAT trades. I've had a couple, one win, one loss. That's it right now. The market's not doing anything. This is a good day to keep your money in your pocket. Let's wait for some setups. Let's see if the market closes above the 15 EMA on the SPY. Makes a big difference if it does or it doesn't. We won't know that till it's close to the end of the day. So anything you want to trade right now, with some exceptions, is they should be an intraday trade. There's some stocks that are set up for potential long. Palantir is one, as long as it stays above 188.10. But again, it's very tricky when the market is stuck like this between resistance and support levels. It's very tricky to try to find something that you can hold overnight. So I'm opting not to hold anything overnight except Microsoft. I've still got Microsoft, which pulled right back down to the 15 this morning and bounced right off of it. You're trying to make a broad TC2000 PBO scanner. Yeah, there's a lot. You can put lots of criteria in there. I mean, obviously you're going to look for a stock that's probably stacked 2 or 3 red candles to the downside, hit and is bouncing off the 8 or the 15. or one of the major moving averages on the daily. That's what you want to see. Do I ever think of adding crowded positioning to your analysis? Looking at COT, commitment of traders data. This one focuses on finding which area is overcrowded, or at least avoid, that can potentially help in getting out of the bullish trades that might be losing steam. Wonder if you can save us some good setups going bad due to some reason unknown. Maybe it's crowding. Yeah, I mean, listen, there's a lot of volume areas. That's what for one thing. That's one of the high volume candles, high volume support and resistance levels that I draw. Those are institutionally created candles with high volume. They typically are created by institutions, which means they're going to offer some support and resistance levels. There's a lot of different things that people can put on their charts for determining how much volume there is. People put call ratios, how many puts, how many calls. They look at where the biggest amount of volume has been on certain trades. You can put a lot of these things on your chart. I don't use them. You have to be careful not getting into the weeds too much, because you're going to end up with resistances and support everywhere. I mean, you're going to have just everything on it. I'm just watching the price action and my high volume support and resistance levels. That's what I use. Other people use different things, and there's other. I'm saying that they're no good. They can be. Like I don't use the AVWAP, P, Qs, E's, or any of those. And some people like those. Some people like Fibonacci's. I don't like Fibonacci's, but some people do. Joe over in the Discord room uses them. But you have to settle on something. You want to keep this as simple as possible. The problem with getting too many things, and listen, I've been doing this a long time, and I've gone through permutations of so many different indicators to try to find strategies that work using different indicators. And most of the indicators don't help you at all. But there are some other good ones. But I've got enough on my chart right now that my trading is working 85 to 90% of the time. I'm not going to go around and going to try a bunch of other things. I'm looking at more strategies, but I'm not going to put the the inflection points based on volume or based on gamma or any of that. I don't do that. A lot of traders do that, all right. But again, you're going to get. I'm trying to bring strategies and methodologies and indicators to you that traders can learn pretty quickly, pretty easily, use them pretty easily without getting too much into the weeds. And it's very easy when you're trading to start looking for more holy grails. Start looking for this indicator and this indicator and this indicator and putting those. Try this one, try that one, and you can drive yourself crazy. But I think once you've got a strategy that works 85 to 90% of the time with those indicators, I'm not going to try to tweak it by putting on a bunch more stuff that I have to test to see if they actually work. So no, my short answer to that is I have not looked at the crowding positioning of traders. No, I'm much more interested in the high volume institutions, what they're doing. I don't care what the retail traders are doing. You don't do that, but Jason Shapiro from a Crowded Market Report does that. Listen, there's a million different reports out, not a million, but there's lots and lots of people that use all kinds of different things, all right? And I mean, I've used so many of them, I can't tell you how many of these things I've tried, because there's so many indicators that you can use. And, Ikamuchu cloud, some people use successfully. I've tried to use it. I never really thought that it gave me much additional confirmation or any additional edge. If I'm not getting an additional edge out of an indicator, I don't want it, because I want to keep them with a minimum. So that's what I'm doing. Joe's mentioning, by the way, Joe from Discord, on a PBO, look deeper into TMA, 2 EMAs, and then cross above the 8 EMA with both trending up in TC2000. Yeah, I get that. 21 EMA, okay, yeah, for the 21 EMA. Yeah, he uses the 21, I use the 15. You can use 15 and 21 combination. I use the 8 and 15. You know, some of these are arbitrary. You know, is there a difference between the 8 exponential moving average and the 9? Basically not. You know, it's gonna be very, very different. But you've got to settle on something that you can use, and especially when I'm trying to teach. I have to have some firm indicators that I can consistently use, that I know are going to work, that I can teach, so that everybody can follow those. All right. So that's why I do that. Again, you can find a lot of people out there, Ram Kamara, that use a lot of different things. Before I started trading full time, I was in over 100 trading rooms, testing out strategies, quantifying them, because I used real money to see if they worked. And 95% of the rooms I was in or more were worthless. The strategies that we used were worthless, but there were 4 or 5 good ones. There were 4 or 5 good ones that I used. I was in a thing called Candlestick Forum. The owner has Steve Bigelow has passed away, but he was an expert in candlestick formations and how to trade just candlestick formations, bull flags, PBOs, dark cloud covers, all of these kind of things, kicker signals. There was a lot of those, and I learned an awful lot from there. And I do use that information in my trading, candlestick formations. I use that. But you know, there's only a few of these that I found were actually worthwhile. You know, this guy Andrew Keene does it. He's in a room and he uses the cloud and an RSIs and a bunch of stuff, and he uses massive amounts of volume on his options. He trades, you know, massive amounts of options, huge positions on trades. Has big swings up and down. You know, he'll be up 250,000 in a month, and he'll be down 500,000 the next month. But I never found using the cloud effective, and that's what he teaches. But I try to teach a combination of the indicators that I have found that work for me. All right, so that's what I use. Ram Kumar, you know I haven't released the UMCAT strategy yet, but wonder if it works well for out of the money. Wouldn't it also be good for 65 to 70 deltas? Yeah, it would. Yes. You can use them for 65 to 70. Usually when I'm doing 65 to 70 deltas, I'm trying to potentially swing those kind of trades, which I'm not going to do with an UMCAT. But what I'm trying to do with the UMCAT strategy is have an intraday trade that's going to have a much bigger ROI, much bigger return on investment than you would get with a 65 or 70, right? Than a 65 or 70 delta. That's why you're going in with the low deltas, because if the catalyst works with out of the money, you can, I made 80% today on that LW trade. 80%. It takes a lot to make 80% on a 65 or 70 delta. All right, because you've got a lot more invested in it. So it's basically just another strategy for that. I would, and if I was going to potentially swing it, like I did with Microsoft, and like we did with Roblex, I'm taking 65 to 70 delta and allowing myself to go overnight. It's completely different mindset on UMCAT than it is on doing that. And Harry, you can see on website gurufocus.com that show all the well-known investors and traders. Best of them cannot beat 60% accuracy. That's right, they can't. And most are below 50%. It opens your eyes, but they're excellent salespeople. Yeah, that's gurufocus.com. There's lots of people out there and touting their wins. You know, be very cautious here, because there will be people that tell you that they can have a 50-50 win rate, all right, and make money, which mathematically you can, right? I mean, if you're getting a 2-to-1 win-loss ratio, you know, every win is $2 and every loss is $1. You can make money trading at 50-50. Okay, but what they don't tell you, or what maybe they don't understand, is most people can't do that, because your trading mentality with a 50-50 win rate is going to be, you're not going to have any confidence in your trades at all. You're not going to trade them accurately. You're not going to trade them effectively. So 95 or more % of traders cannot make money with a 50-50 win rate. I don't care how good you are at this, you can't do it because your trading mentality, your emotions are going to take over for you. It's not going to allow it. Most traders need at least a 75% win rate, at least 75% win rate to be able to be profitable consistently, because they're going to be able to believe in the strategies that they've got. And when you believe in a strategy that works, you can stick with it. If you don't, you're going to waver. You're going to get out too soon. You're going to get out too late. You're going to get in too late. It just messes up your whole mind as far as trading mentality is concerned. All right, so I'm not going to go into a lot of detail about that, but that's why a 75% win rate is so critical. And that's why the UMCAT strategy is completely different than trading. I mean, you can trade these with regular calls, in the money calls and puts, and you'll likely make money on them because they've been working very well. But I'm looking for something that can be done cheaply, because a lot of people tell me they don't want to have to put $600 into a trade or contract. They want to put 50, 60, 70 into a contract. Then you can take as many of them as you want. And I'm trying to find something that will work for that, especially in this kind of a crap market. Hey, Gary. To guess the different candle formations to work, there has to be enough people who know about them. And theoretically, any kind of indicators, for example, are work because enough people enough institutions are using them. The candlestick formations are a little bit different, because the candlestick formations, there's so many of them that people notice them and they'll buy them. So if you get a bull flag and it's breaking out or a break into a gap, enough people will buy those. But it's the institutions that have got to make this thing work, which is why you have to have this. The SPY super system is so important, because if a million retail traders see a bull flag or a compression break to the upside, they may jump into the trade. But if you don't have the institutions doing the same thing, that's not going to work. It might work briefly, but it's not going to work. So you've got to know both of those things. But candlestick setups are showing you, especially big volume candlestick setups, are telling you something about what's likely to happen. I mean, why are shooting stars bearish at the top? All right, shooting stars are bearish at the top because a shooting star is an inverted hammer. You have a stock that went big move up, and then sellers come in and drove it right back down to almost where it started. That's telling you that you've reached a level where there's an awful lot of sellers, right? That's what it's telling you. And if you look at the volume, it's high volume. They're telling you the sellers are in there and they drove the price down. It's not likely to go back up there again because there's so many sellers there. That's a candlestick setup. And the candlestick setup is being created mostly by the institutions selling off when it got to that level. That's the resistance level. And that's what the candlesticks are telling you. What? Sarang, it's pretty funny. What do I think of your new strategy? Buying an accidental $14,000 in Microsoft calls and panicking? Yeah. Listen, if you've traded long enough, you've always clicked the wrong button or put in too many contracts. I've done it many times. And what it shows you is, when that happens and you see it, what it shows you is what happens when emotion sets in, because you just set a trigger off in your body for an emotional trade. You're over leveraged. Bam! You might have not done it on purpose, but you're over leveraged. And what you felt right when that happened, which was panic, is what happens when you make a mistake. And it's also what happens to people who don't follow a good strategy and do like FOMO. They chase the stock up in the morning. Not a UMCAT, but they chase it up and get in right at the high because they're a fear of missing out. And then it turns and heads back down against them. They feel that as well. That's emotion. That's fear that they feel. That was fear that you felt. Hey, Mayank, here's an interesting observation. Losing 100% on a high value options hurt more than losing 100% on an UMCAT trade, even though the total money could be the same. Yeah, you know, the thing is, when you're going into an UMCAT trade, you're looking at these trades as a swing trade with in the money calls or an UMCAT with out of the money calls. When you take them, you have a different perception of what's going to happen and what you're looking to accomplish here. All right. With UMCAT trades, you don't have any problem taking quick profits. All right. You can take quick profits. You're out of it. They're out of the money. You know you've got time decay issues. So you approach these strategies with a different mindset. Yeah, I think on the UMCAT trade, the reason that it's losing 100% on value options hurts more than losing 100% in UMCAT is because you know that the UMCAT is much more speculative. So your expectation is you could lose 100% on it. I don't think I've had only one that I lost 100% on, but that is you go into the trade with a different perception of your expectations of how that trade's going to perform. Like a lottery. When you take a lottery at the end of the day on Friday, close in the afternoon, to take something that is out of the money but can get to it. You take that lotto with the expectation that it's either going to work or it's going to go to zero. You know that going in. Harry, MIRM, one of your long-standing biotechs. Yep, popping up today. Mirum Pharmaceuticals with a nice pop. Again, as with most of these, this is too far extended for me. Big volume on it today. New all-time high, but probably too far over, 2 ATRs away. Terrible options, but great stock. Thank you. Again, a lot of these biotechs do not have good options. You would be buying stock or selling stock in them. All right, it's 1 o'clock. I'm going to get some lunch here. I talked too much. I was talking too much about that. All right, everybody, I'm going to go ahead and shut down the YouTube feed. Thank you very much, YouTube folks, for being here today. I appreciate it. Pretty slow day in the market, as you can see. But we've been talking strategy. We did take a out of the money trade today that worked out beautifully. We closed out our weekly ATM for a nice profit there, and we closed out our CCL time spread for a nice profit there. I get out for in for 12, out for 15, so it's about 25%. Some folks get in for 8 and out for 16. Some folks get in for 10, out for 17. But it was a nice profitable trade, and that was the whole point of it. Weekly ATM also worked beautifully. About $60 per contract for over 2 weeks profit. Very nice. Moderna having a strong day as well, Ari. Yeah. Moderna's up over 33.18. It's got some resistance at 35.64. It's also a little extended now. Very choppy stocks. These healthcare stocks and biotech stocks, especially like Moderna and Pfizer and everything, they just up and down a lot on news. You have to be very cautious with them. All right, I'm going to grab some lunch. I'll go ahead and shut down the YouTube feed. Thank you very much, everybody from YouTube, for being here today. I very much appreciate it. You can go to rightlinetrading.com if you're interested in joining the room or the alert service or buying the software, the SPY Super System software right here, which, by the way, is showing us that we're bullish. The market's not doing much, but it's showing us that we're bullish. And the market internals right now have turned slightly down. They've been running up most all day long, but they have been drifting down for about the last 25 minutes or so. All right, so thank you very much. Have a great weekend. Everybody out there in YouTube, have a great holiday season coming up if you're not here back again next week, but I'll be back here on Monday. Monday, Tuesday, full days, Wednesday, half day, Thursday, market closed, Friday, open but dead. It's going to happen on Friday next week. All right, have a great one. See you tomorrow. See you on Monday, sorry. Have a great weekend.